Welcome back. We are back for a second conversation with James Callahan. He's Associate Portfolio Manager at Barometer Capital Management. You talked about some high-level themes with respect to banking, more M&A, others as well. You think it's a favorable banking environment. Let's talk about some specific stocks. Goldman Sachs, JP Morgan Chase. You like them both?
Certainly, we like them both. JP Morgan has been one of our biggest positions for probably over a year now. The view there had been that the U.S. is going through a situation in their banking sector where the big get bigger. Maybe we turn into an environment in the U.S. similar to what we have in Canada, where the larger banks suck up assets of the smaller banks. JP Morgan has proven themselves to be, it's difficult for them to go out and acquire companies because of their size, that they're not allowed to. Mm-hmm. But when they need to step in with a situation like First Republic, as we mentioned earlier, they do so in a quick way, and it's accretive to earnings, the same quarter. Mm-hmm. So it's a very well-run bank. They touch everything. To get bellwethers on the U.S. consumer, the best place you can look is JP Morgan earnings and their card data. Mm-hmm. So I would say for JP Morgan, very well-run. The big get bigger. They also are exposed to a better deal-making environment, as they frequently feature at top of the investment banking league tables. And then Goldman, it's a bit more of a pure play. They've grown the wealth management business quite nicely, and that's been great. It's good to stabilize the earnings a bit from what historically has been a volatile name on the earnings front. But they're more of a pure play deal maker, and that's the thesis on Goldman.
Regionals have had a difficult time ever since the Silicon Valley Bank collapse of early this year, or was it in 2023?
Last year, 2023.
What do you see there in terms of the regionals?
So the regionals have been in the doghouse for a long time, really since the beginning of 2023, and it's only been in the last kind of 4 or 5 months that a lot of these charts have firmed up and these companies have become investable again. So right now we're seeing potential for deregulation, as we discussed, for M&T Bank that we'll talk about. They sit at about $210 billion in assets, so they're right underneath that cap, where their regulatory reporting requirements could be more costly. Maybe under a deregulation regime, it won't be that way. But they have a good geographic exposure. They're Northeast United States based, so they should see some good economic growth. And then for Regions Financial, they're a little bit smaller. They're focused on the southern U.S. states, Texas, Florida, and then the Midwest. So under a reshoring trade, they likely see better than country average economic growth in the areas that they serve. So it should benefit them. Should
investors be worried about significant relaxation of regulation in this sector? We all remember the financial crisis of some years ago now, but it was in the aftermath of that we saw tightened regulations.
I think a lot of investors would take the view that the regulation of the banks after the financial crisis maybe went a little bit too far. It's part of the reason why I think with the Basel III regulations that we've seen coming, as we're closer to the implementation of those, they've decreased in severity over time. Because I think regulators realize to a large extent the banks are managed a lot better than they were back in the day. Of course, that's a tail risk that we consider as well, that things will get wild again. But no, the banks are better managed than they have been. We have seen some blow-ups in the regional bank space, within the last 24 months. Those were specific issues, specific funding issues. I don't think that is a systemic problem. And so, no, I think the banks are well regulated and they're in good shape.
Okay, we're almost out of time, but we did promise viewers that you'd offer some views on stocks that serve the police community and the security community.
That's right. So one of the thematic trades I think with a Trump presidency is bigger law enforcement budgets and just an increased focus federally on law enforcement. 2 stocks that benefit from that: Axon, which manufacture tasers and police-worn body cameras, and Motorola Solutions, which are the other big manufacturer of body-worn cameras, the security cameras and the like. So both of those names should benefit in the environment.
Thanks a lot for coming in.
Thanks, Paul.
That was James Callahan, Associate Portfolio Manager at